Central banking in the United States. The United States is economically the most powerful nation in the world today. This is what makes the study of central banking in the United States all the more interesting. Almost all other countries in the world adopted central banking without any major hassles. However, in the United States, a lot of conundrum took place before central banking could be established. The founding fathers of America were opposed to the idea of a central bank, and they have explicitly mentioned this opposition when Thomas Jefferson called central banks more dangerous than standing armies. The idea of central banking was therefore considered to be unconstitutional, and the general population had to be convinced to adopt this concept. So, we will trace the history of the two central banks that were set up in the United States. 1791 to 1811. The First Bank of United States. The first Bank of United States was proposed in the very first meeting of the First Congress. Alexander Hamilton, one of the forefathers, believed that a central bank would be indispensable to facilitate the swift transfer of money across states, as well as to provide credit to the state's government. However, the idea faced multiple obstacles from other leaders such as Jefferson. Despite Jefferson's vehement opposition, the First Bank of United States came into existence in 1791, just 15 years after America gained independence. Jefferson's opposition wasn't the only obstacle faced by this bank. The conditions were not ripe for banking at that time. There were over 50 different types of French, Spanish, Portuguese, and American currencies in circulation at that time. Also, the bank's charter was valid only for a limited period of 20 years past, which it was supposed to be renewed. The First Bank kept expanding its operation during the tenure. Even 1 year prior to the expiry of the charter, additional branches were opened along the east coast of United States. However, President Madison didn't renew the charter of this bank in 1811 amidst rising concern of inflation and allowed central banking in the United States to come to a sudden end for a short while. Many believe this created monetary instability, which lasted for many years following 1811. 1816 to 1832, the Second Bank of United States. For the 5 years after the collapse of the First Bank of United States, monetary instability ran rampant across the United States. The impact was large enough for the Congress to consider the creation of another central bank called the Second Bank of United States. This was the successor to the First Bank and had virtually the same right and privilege. The Second Bank also had monopoly rights over creation of paper money and regulating its value thereof. However, the Second Bank faced much larger opposition as compared to the First Bank. The seventh President of the United States, Andrew Jackson, vehemently and publicly opposed the central bank, calling it the work of moneyed interests to ensure that continued domination over the average American. Jackson portrayed the second bank as an extremely corrupt institution that needed to be uprooted from American soil if economic independence were to be maintained. He led a campaign against the bank, and finally the second bank too collapsed in 1832, even before it could complete the 20 years tenure that had been granted to it by the charter. Thank you.